Hello and welcome to Market Watch for the end of the week that started on the 15th of January 2018. Only thing I really wanted to point to you today is what happened in employment on Thursday. And the chart that you've got on screen, I know it's a little bit busy, but that's okay. Have a look clearly at the red line, that's around employment change. The green line there is very much on the unemployment. And the other two, the yellow and the blue, are around full and part-time. So 2017 is the best year in terms of employment growth since 2005 on a seasonally adjusted basis. You saw just over 403,000 jobs created. If you want to do a bit of a rough back of the envelope calculation to the US, that's the equivalent of them adding 5.3 million people over the same equivalent time. So very, very strong employment numbers. And for the first time since 2012, full-time employment completely outstripped part-time, seeing 300,000 jobs added over the same period. Not all that good news though. And the reason for that, yes, we've got employment growth and it's incredibly strong and that is a positive. It clearly also showed inside there that there are some parts of slack that's in that number. So participation is up, that's a positive. So therefore more people in the working age sort of bracket are looking for work or are in work. That's a really good thing, but what isn't translating is wage growth. And you can see that in the average hours worked was actually slightly weaker in the December month. Now, I think you can probably put that down to seasonality considering it's Christmas. But again, it's just a little bit of few things there. And the reason I want to highlight all that, the employment numbers are great. They're a very good leading indicator for growth because they can feed through to things like consumption, also just general optimism. On an RBA perspective, though, it does show that the ability to see inflation materializing quicker is probably still a bit of a distance away. However, it is clearly likely to start translating sooner or later. So there is a positive to that. Have a look at what happened in the swaps market and also the interbank market. Don't worry about what they are completely, but more worry about the fact that they do sort of forecast probabilities of rate rises. And the December and November meetings actually popped up. So the probability of a 25 basis point rate hike in Australia for the November month, or at least the 12 month to November, is now around 67%. That seems a little high, but in saying that, that probably does justify the employment numbers. It will fluctuate. There is that probability. Again, from what you can see in the inflation, it looks less likely than actually happening, but it just needs to be part of your thinking. And interesting start to 2018 off the back of that. So all of that around that employment, there is no doubt that it is growing and you should be seeing that considering the growing economy we have, but there are just enough caveats in there to keep the RBA on the fence.